All right, I'm here with Mike Ryan, CPA and founder of Insurance Agency Consulting Services. Mike has over 35 years of business consulting experience to insurance agencies and brokerages. He successfully has negotiated the purchase, sale, and merger of numerous agencies throughout New England. You are located, I believe, in Massachusetts. Is that right?
That's right. Westwood, Massachusetts is my office location.
Perfect. Well, and we really appreciate you joining us here to spread your knowledge to the agents that we help here at the Insurance Stream podcast. And so thank you. But I want to jump in because we were kind of talking before the podcast, and we're having numerous different folks in this merger and acquisition series, giving advice. And you hit on something that I think is paramount to everything in the sale process that really we haven't covered yet, is the mistakes that people make in the merger and acquisition. I mean, so my agency was acquired in 2020, and all in all, it went pretty good. Most of the things went right. There was some things that didn't go right? Probably on both sides of the transaction, I would presume. But there was some things that, going back, I definitely would have done differently. But in your 35 plus years of doing this, we'll start off with the biggest mistake that most people make, or that you've seen either your clients or other people's clients makes, and then we'll dive into the nuts and bolts of all the other ones. What's the number one mistake people make?
I would say the number one mistake they make is to, only talk to one buyer. And I run into this quite a bit where, they've known another local agent for many years. And, over the years, they'd say, if you're ever looking to sell your agency, I'd be interested. We'd be a good fit. And so, it's oftentimes it's probably the easy way to sell your agency. It's somebody it's not confrontational. It's hopefully a good fit. You think, well, he's down the street or he's local to my clients, and this would be a good fit. But oftentimes they're not the best buyer. Every agency that I've dealt with has certain things that the seller is looking for. Certainly price is important, but it's not the only thing they're concerned with. I've had sellers who said, I want to keep the name of the agency. I want to keep the location of the agency. That's another mistake in my mind that some sellers make, because it limits the potential buyers. But what I do is I represent the seller. That's my role. And I counsel them as to who the potential buyers are that would be the best fit for their agency. So certainly with some larger agencies, the buyers, the equity people, some of the national bigger buyers, they want the owners to stick around. Oftentimes they want them to invest some of their purchase proceeds in the larger organization and commit to work into the future, maybe have an earn-out as part of the deal. And that's fine if that's what you're looking for. But for, quite frankly, most of the smaller sellers that I work with, they're older, they're looking to retire, they don't want to continue to work. They understand, and I always explain to them that as part of the process, they're going to need to be involved and available for somewhere up to 6 months after the closing. But I would think the biggest mistake I see sellers make is to limit the buyers they talk to and not really educate themselves and be aware of who all the buyers are. Some buyers do. In Massachusetts, there's some regional buyers that do a fair amount of advertising in the insurance publications, and I'm sure they get some results from that. But as I say to the sellers, I said, would you only talk to one buyer if you were selling your home? Why would you only talk to, the first buyer that contacts you or the one that you respond to their ad? So that's the biggest mistake I see sellers make.
Sure. Well, and I mean, I imagine besides maybe, and not to say that the teams of folks that are looking to buy that are smaller or even larger, that they don't have the, team or capacity to handle the acquisition business. But, maybe that first person, even if they're offering the best price, especially if there's an earnout or something like that, and they don't have the structures in place to handle it, you're leaving a lot of money on the table. And then also, if you only talk to one person, I mean, that's pretty obvious that you're leaving potentially, hundreds of thousands, if not maybe, depending on the size of your agency, maybe millions you're leaving on the table by not talking to the right folks. Are you seeing that some of the local or regional players are able to compete in the New England area with those national players?
I do. I work with from very small agencies. Actually, today we accepted an offer on a small agency north of Boston. The very owner-operated, one employee, very good book, about $225,000 of commission income. So it's a small agency, but that's a little small for some of the big buyers. Sure. But it's very attractive to some of the larger local agencies.
Yeah.
And he just accepted a very strong all-cash offer for his agency. So, yeah, the local players can compete. The multiples in Massachusetts just continue to rise. 3 times commissions is for just an average book is probably commonplace. I saw agencies sell for over 4 times commissions just last year, 2 agencies that I represented. And in those cases, they went to larger greater Boston, Eastern Massachusetts agencies, but not to national players. So, yeah, the local agents can't compete as long as they're realistic. I mean, most of these deals nowadays, especially for personal lines agencies, are all cash at the closing. So there's no risk to the seller. They get all their money, and it's so competitive for the buyers that's what they need to be willing to do if they want to compete and acquire an agency.
Absolutely. So now your specialty, and I imagine 35 years, 35 plus years, you've probably done it all. But your specialty, are you working with mostly personal line sellers? Are you working with some commercial line seller? The people that mainly do commercial lines, do you do both?
I do both, but the majority of what I've done has been personal lines. Now, most of the agencies have some commercial business.
Sure.
A lot of the small personal lines, it may only be 10% of their revenue. Right. But in some cases, I've got a small agency I'm going to be working with south of Boston, and they're 75-25, which is pretty good, commercial. And that's attractive to all the buyers. The only difference really with the commercial lines business is in terms of the pricing and the sale of the agency and the structure of the sale. Most buyers, if there's a few large commercial accounts that are included in the purchase, they may want to carve those out and pay for those over some period of time based on retention just to protect themselves. But other than that, if it was all pretty small commission income on a lot of local tradesmen blocks and things like that, then it would be an all cash offer. But if they had a couple of big commercial accounts, most buyers would want to protect themselves when it came to those accounts. And
sure. So, well, and a lot of those huge accounts, those are, obviously like everything in insurance, right? But a lot of the huge accounts are really relationship driven. I know, with our agency, we were fortunate because I think our largest account made up like less than 1% of our revenue and stuff like that. It was a decent sized account, certainly not, like large, but we just were spread so, evenly that worked out for purposes of our transaction. But yeah, I mean, you've got a, $100,000 commission on a $300,000 agency. You're gambling big time if something happens with that. So that certainly makes sense. What would you say the next, because I mean, we've gone over, not entertaining enough offers, right? Because you're leaving cash on the table. Maybe it's not the right buyer for your business culturally or whatever, because you want to, at the end of the day, usually cash rules, right? But you hope throughout that process that you don't give up too much. with, if especially if you have an agency size that your team's getting acquired with the book of business or something like that. You want to make sure there's a good cultural fit there. So a lot of factors going into choosing the right buyer. But what would you say the next biggest mistake that you see folks making is?
The next biggest mistake I see them making is the lack of employment contracts and anti-piracy agreements with their people. That can create, no buyer is going to buy your agency if your people are free to walk out the door and go down the street and work for your competitor.
Right.
And it's very common in small agencies. They've had people that have worked for them for many, many years, and they've never had any kind of formal agreement with them. And I've seen cases where, really the seller is put in a position where they can't sell their agency without the cooperation of the employees that have no legal restrictions on them. A really terrible example is very small agency. The owner was elderly, not that involved. He had one key person. Now, this is a small agency. And when I spoke to him, he wanted to sell his agency. When he let his employee know that, she said, well, I want to buy it. So, how do you deal with a situation like that? How do you get fair value for the agency when the most important asset of the agency has no legal restrictions on what they can do? And no buyer is going to want to buy the agency without that person in place to help them transition. So that's an extreme example, but I've certainly had other examples where, now you have to pay people to agree to sign an anti-piracy agreement. So this is something, and I tell sellers this all the time, and they're always very reluctant to go to their employees that have been longtime employees and ask them to sign an agreement. But it's a huge headache if they haven't already addressed this before the sale.
For sure. Well, and so if an agency owner is listening to this right now, maybe they don't have some kind of anti-piracy agreement in place. We never really did non-competes because the geography scope of where our agency served was so large, and I think there's lots of different schools of thought on this, and probably a lot of them are correct. I always have seen non-compete agreements as kind of like un-American a little bit, I guess. But it's so we never had our employees do like a strict non-compete. We did protect a radius around where our location was. And, but, besides that, it was all non-piracy all the way. And those are ultimately, this is not legal advice, but we consult with attorneys over here all the time. And from everything they have told me, those are a lot more bindable. You've got more sticking power. You've got more longevity. Whereas, maybe a non-compete would be enforced for a very short period of time, no matter what the written agreement was, right? Like if it's a 5-10 year written agreement, there's only so much that certain courts in the country are going to do to enforce that past maybe a year or two. And then, the geography aspect of it, there's just a lot of moving parts in those, but non-piracies, those are really bindable. And so if there's an agency owner out there right now thinking about selling, maybe they haven't talked to their employees yet about it. Usually they don't until it's time. Would you say just, getting a fresh set of contracts up, making sure that non-piracy is in there, having everybody sign it would be a good move, very first thing?
Absolutely. Yeah. Because if you're going to have a problem with someone not signing, you need to know it, up front. You don't want to get to, accept an offer and be involved in due diligence and then go back to the buyer and say, we have a problem with this or that employee. So, it should be addressed.
And usually what we would do in our agency is we would have our employees sign new contracts every year, outlining their scope of pay, if we've given them a raise, outlining what their duties are. Usually, typically speaking, in an agency that's even decently fast growing, you've got multiple changes that take place over the course of 12 months on what this person does for you or how their responsibilities shift. So outlining those, we just did it every new year. We just would go through. That's typically when we gave any raises or anything like that. Just do it all at the same time. Put it all in the contract to make sure the non-piracy agreement is there within that document. So that's great advice, because those are one of the things that you think about. Really, it's not on your radar till it has to be, right? So that is awesome. What would be your next big keystone piece of advice?
Well, beyond those two, in terms of getting the agency ready for sale, to have a good management system in place, to clean up your book in terms of, loss ratios, trying to improve your loss ratios, maybe get rid of some of those clients that are dragging you down. It's a little bit of work to move those accounts sometimes. And, the buyers, they want to know what the loss ratios are. They want to know how your book's going to fit with their book and how it's going to impact their profit sharing and contingent payments from their carriers. So, a lot of times it's work that, I think a lot of owners, the momentum's there. They keep renewing the same accounts, and maybe they're not the best accounts, and they cancel and they have to rewrite. And maybe they really need to consider that they'd be better off with maybe a little bit smaller book and better quality book, because that's what the buyers are looking for, and that's going to command the highest pricing. So those would be a couple of other factors that I'd recommend.
Sure.
But maybe I'll just explain a little bit about what I do in terms of I have a process. So when I talk to a new potential client of mine, I explain to them that I represent the seller, which is kind of a switch from typical brokerage situations. I represent the seller, but I charge the buyer what I call a success fee. And I started to do this a long time ago because I had many buyers tell me that they would be glad to pay me a finder's fee if I brought them an agency that they were able to acquire. So I have agreements in place to make sure that the seller understands that I represent them, that they have no fee obligation to me, but I will help them throughout the process and represent them and work in their best interest. And then once I gather information on the agency, I discuss with them who I think some of the best buyers would be, but I also question them. They usually know some of the local buyers that maybe they think would be a good fit. We then try and narrow it down to 4 to 6 strong potential buyers. And I then contact the buyers and will, in general, describe an agency to them before I have them sign an NDA. If they indicate they're interested, I have them sign an NDA. I use a 2-part NDA. They
showing
sign
kind
NDA.
of the profile of the agency,
Right.
then, like the book and all that. Yeah, perfect.
And then once they've signed the NDA and I've sent them the acknowledgement, they also sign my fee agreement. I charge a percentage of the purchase price, and generally with most of the agencies I work with, it's 5%. And then once I have all those agreements in place, I provide information to the buyers so that they can evaluate the agency and come back with an offer. I set a time frame. I ask them all to come back with their offers, and usually 3 to 4 weeks from the beginning of when I provide them with information. Sometimes things drag on. And then it's really up to the seller to evaluate. I evaluate the offers with them. And, if 2 potential buyers were very close in their price or their offer, then I tell the sellers, if you'd like, I can go back and ask the buyers if they would like to improve their offer, explain to them that it's been very competitive. And that's the process that I use. It's worked really well. I know. Yep.
Well, one of the things that I noticed right away is you're a CPA and you have the consulting services. You're representing the buyers, or representing the sellers. Sorry. We had a team that we worked with who had a CPA on board, but this is basically a one-stop shop for they're working with one person throughout the whole process, which is you. And you're going in, you're kind of scrubbing the financials, figuring out what that EBITDA amount is, you're, looking at the kind of the financial landscape of the business. And so you're really able to, be a full service operation for these folks. So you don't have to go, getting these different services to coordinate the sale of your agency, right? That's the whole premise of what you do.
Yeah. I'm the only employee. It's a one-man band. I do everything. I draft the letters. I answer all the phone calls. I work one-on-one with the buyers and sellers. They have my cell phone, and that's the process. And it's worked really well.
Sounds like it. What
Yeah.
if I'm coming to you and I'm like, hey, Mike, I'm Abe. I'm ready to sell my insurance agency. From that day, and I know there's going to be some stuff that depends on me, right? Like how fast I can get you back accurate financials, how fast I can get you back book of business reports, things like that. For an agency that's got an agency management system, maybe you've had an accountant doing your taxes, for the last 3 to 5 years or more. And, you kind of have everything, all your records in one bundle. You have, I'm sure, that's a pretty quick turnaround process. If you're like, well, send me everything you got. And 6 hours later, I send you, an email with a zipped file in there with everything you've requested. Let's, because that's really most of the time consuming part from what I'm gathering from a lot of the folks that I'm talking to in this merger and acquisition series is waiting on information. But let's say we've cleared that hurdle. What kind of time frame are folks looking at? And I know the short answer is it depends, right? But let's say it's a healthy agency. They've got, their loss ratios are decent. They've got all their records in a row, and they get them back to you. Today is March 1st that we're recording this. How soon am I looking at, walking away with a check in my pocket?
I tell people that on average it's 6 months. It can certainly be faster, if that's the priority. A lot of the time, what does tend to happen is people seem to like the end of the year. They think it's a clean cut up. They might say, I'd like to have this wrapped up by the end of the year, which usually results in a lot of attorneys, running around crazy at the end of the year. But I tell them 6 months. It can certainly be done faster. You're right. The information gathering, sometimes I have a questionnaire that lays out all the information I need, all the attachments I need, all the reports I need. I send them that. Some people are very organized and complete it thoroughly and send it back to me within a week. And some people, it takes them a month to or longer, or they send you back an incomplete report. So that can be a stumbling block, assuming that's not a problem. Like I said, usually I like to give the buyers 3 to 4 weeks to evaluate the information and get back to us. And then, quite frankly, once we accept an offer, it's in the attorney's court. And unfortunately, that can be very time consuming, back and forth. I do always recommend, and maybe this would be another one of the mistakes people make, is to use an attorney who's done insurance agency transactions in the past. I give people the names of a number of people that I can recommend that I know are knowledgeable. But, if you have an attorney who really doesn't understand the insurance business, questions about, what's direct bill commissions versus agency bill commission, what's contingent income, what's profit sharing, there's just so many factors that you have to educate that attorney, and that's going to drag out the process.
Cost you money, right?
Yeah,
you're paying them to learn.
Exactly. So that's certainly one of the other key things is to use somebody who's done insurance agency transactions before.
Sure.
That would be another mistake people make. But that's the time frame. I usually tell them 6 months. It can certainly be quicker, and it certainly has dragged out longer than that. But I'd say 5 to 6 months is a good estimate.
Yeah. Well, and going back to the attorney selection process, right? So, it sounds like you've got a short list of names and numbers that folks could reach out to you, and then they could call and interview those attorneys. We were fortunate. When we started the process of selling our agency, I happened to have a slideshow presentation in my email that our premium finance company had sent to me. And it was by an attorney who specialized in merger and acquisition. And he had been working up, we were in the Pacific Northwest. So he had been working up there out of Seattle, Bothell area since like 1970. And he started doing acquisitions for Safeco Insurance at that point in time. So this guy, had more acquisition experience than I have life experience. So that was very fortunate for me because we didn't have to explain anything to him. And we even got it back. The original contract that we got, he was like, you need to talk to a CPA, but like, I think they've structured this thing lopsided because, industry standard is this and this for, what you're going to get taxed on is income and long-term, capital gains and things like that. So he was able to provide some feedback on that, just even though he wasn't a CPA. I'm sure that's what you do for your clients because you see these deals all the time. But, he was able to throw that back in our court. And then we were able to reach out to our CPA and talk about that. So, yeah, a good attorney. And then I had interviewed somebody last week who sold his agency. And that was one of the things he said, that he was from a smaller town and this guy had come from Wall Street and opened up a private practice in his town and had all this merger and acquisition experience, but not in the insurance industry. And then, a week after the close of his transaction, the guy went and started working for the World Bank. So, he goes, if I had to do it again, that would be the one thing I would do differently is I would find a attorney that specializes in this stuff.
Exactly. Yep. No question about it. It makes things go much, much smoother.
For sure. So you said agency management system is huge, making sure you're organized because, the seller only understands what they can see on paper, right? Or the buyer, excuse me. The buyer only understands what they can see of the seller's asset, which is the agency book of business on paper. Staying really, really organized. Any other advice? How do you know when you're ready to sell the agency? And then our part two of that question, are most of the agency sales that you coordinate, are they staying on board or are they cashing out?
They're both. Usually the owner is cashing out and leaving. Oftentimes the staff is sticking around it. And that's another issue that comes up. It's not attractive, obviously, to a buyer to purchase an agency and have all the people that have relationships with customers leaving. So to have in place some strong staff that are going to remain is certainly a selling feature and makes an agency more attractive. If the agency's small enough, maybe it's not a problem. This agency I just mentioned that's selling, that is a case where everybody's leaving. The staff is leaving, the owner, understands he's going to be involved. But right now in Massachusetts, from a buyer's perspective, to be able to acquire qualified, CSRs and staff is definitely a plus in an acquisition. And to acquire an agency that's understaffed is more of a challenge. I'm actually working with another agency that has that problem. And one of the reasons they're actually selling their agency is because it's so difficult to train staff, to maintain qualified staff and service their customers. So staffing is huge. Most of my experience is, New England, primarily Eastern Massachusetts. I have done work in both New Hampshire and Rhode Island and Western Mass, but I'm primarily working in the Eastern Massachusetts area.
So if somebody in Florida came to you and said, I want to sell my agency, would you say you should probably talk to somebody in Florida? Or do you handle it?
Well, I'm in Florida right now. Florida is a different market. And I did consider, since I do spend some time down here in the winter, getting involved. But I really, quite honestly, I've been so busy with New England and really greater Boston that I haven't bothered to pursue Florida. But it is a different market. New England, as you probably know, is a very strong independent agent market. And Florida, the direct writers are much stronger. Yeah. The agency system's different. And quite frankly, down here, I'm not as familiar with the carriers. I'm not as familiar with who the major players and buyers are. So, no, I haven't tried to, not that I probably couldn't do it, but I have not done that yet.
Sure. Well, you found your niche, and I mean, it's clearly
Correct.
working out well for you. And so, why change a system that's not broken, right?
Exactly. Yeah.
If you had to consult somebody, I mean, you probably do this anyway, but if somebody came to you and said, I don't know if I'm ready to sell, I don't know if I should, what would be your advice to them on how they know they're ready to sell their agency?
Well, I mean, I think a lot of the time, what part of that decision making is whether or not financially they're going to be in a position after the sale to feel they can afford their retirement. So I suppose one of the things that, I have people call me all the time and they say they want a valuation of their agency. And so I say, well, what do you want that valuation for? And usually what they'll finally come around to is that they're wondering whether they can get enough money for their agency that they can retire. And I do explain to them that there's really, in my mind, there's two different things. There's an agency valuation, and then there's an agency, what I would call more an appraisal. And an appraisal is what it's going to sell for.
Mm.
And a valuation is what it's worth as a standalone insurance agency. So if I were going to buy the agency and I didn't have any other insurance agencies and couldn't create any synergy with their agency, what would that agency be worth to me or any other buyer? And that's going to be driven primarily by cash flow, EBITDA, whatever you want to call it, your return on investment, and you decide what that's worth. Whereas most of the time, these small agencies that I deal with, they're really going to sell to someone who can roll their book into their location, who can combine it with their book and now receive better contingency profit sharing payments from their carriers, can grow their agency, maybe can acquire some people that are of value to them. So they're really looking for an appraisal, and that's what I try and help them do. I mean, all I can do is ask them some general questions, get a feel for the quality of the agency, and tell them what I know of the local market in terms of what agencies are going for.
Sure.
So that's pretty common. Beyond that, whether or not they're ready, sometimes I've talked to sellers and they say, well, I'm not ready to retire for 5 years. I'm 60. I want to wait till I'm on Medicare and I've saved some more money. Well, there's certainly the right buyers out there who would be only too happy to acquire your agency, provide you with employment for 5 years, have you continue to, work and run the agency or work in the agency, provided you still really want to work. They're going to protect themselves. They don't want somebody who's going to get a 5-year contract and then not do anything. But if they really do want to work, so for the right buyers, that works for the sellers. Not all buyers really are all that keen on having the owner stick around, probably based on past experience where, they start coming in only 2 days a week and then 1 day a week and they're playing golf and so you got to, again, it's finding the right fit when you want to sell. But I would think that those are the things that usually they want to know is what should they expect. Excuse me. Phone.
It's okay.
That's what they want to know what they can expect in a sale, what's going to happen going forward. And then, as far as deciding what they need for their retirement, I mean, they need to sit down probably with their own personal financial planner or accountant to decide if they're going to be in a position to safely retire.
Absolutely. Mike, this has been a awesome experience for me. I've learned a lot. I know that our listeners will learn a lot. If you could give somebody one line of advice when it comes to, I know we've covered a lot, right? But if you could give, if you had to boil it down to one line of advice, that's the most important thing, what do you say that is?
It sounds cliche, but, plan ahead. Start thinking about, when you want to sell your agency and what you want your situation to be going forward now, and do some of that prep work, like anti-piracy agreements. Even though you might say, well, I'm not going to sell for 5 years. Well, get the agreements now and get the employees, in the mindset where, they expect this, that on an annual basis, they're going to sign an anti-piracy agreement as part of their HR annual review process. But, plan ahead and, in today's world with what's going on, maybe don't assume that the type of values we've seen for agencies and the sales prices are going to continue, because it will end at some point in time. I don't know when, but it's been a good ride for quite a while.
Yeah, it has. It's all-time highs still. So, that should help your decision-making process if you're looking to do it in the next 2 or 3 years. There's no time like the present, right? Mike,
Correct.
Thank you so much for your time today. I appreciate it. I hope that there's something that we have that we could use your expertise for in the future, because it has been fantastic, and I hope you'll come back.
Great. Thank you. Enjoyed it.
Yes.